All right, welcome back to the Jason Gray Show. Please like and subscribe. Let's talk about tomorrow's reports. We have the CPI report coming out tomorrow. We have the PPI report coming out on Wednesday. We got builder sentiment coming out on Wednesday as well. A lot of action going on right now in the market. The banks are struggling. You know, the investment firms are struggling, and everyone's calling for their own little thing right now. I mean, everyone's talking about what the Fed should do next. And so let's talk about a few things. So CPI reports rolling out tomorrow morning, 5:30 in the morning, Pacific Standard Time. That report should be looking at a number. The last month's was 0.50 for the number, and we're expecting a 0.4 over. That's the month-over-month number. We want that number to come down so the year-over-year numbers continue to trend down. Now, the year-over-year numbers, last report was 6.4%, and we're going to roll in, we're hoping at 6.0 or less. And if those numbers come down, then obviously mortgage rates are going to recover and look a little bit better, right? That's showing that what the feds are doing is working. Now, what the feds are doing is unfortunately hurting some banking stocks and some banks themselves. So we'll talk about that here in just a second. But then on Wednesday, following up on that CPI report, which is the Consumer Price Index, by the way, that's what that stands for. The next one is the PPI report, Producer Price Index report. Same thing. Those year-over-year numbers need to come down. The month-over-month numbers need to come down. That will translate into better mortgage rates. But the other things that are coming out is on Wednesday is the retail sales. So retail sales have started trending down, and they're anticipating a 0.4 drop on retail sales. I think it could be even bigger than that. You sort of see like a lot of the retailers having a lot of sales, products not moving, so they're having to move some products themselves so they can get some more new inventory in. So it's been a struggle for the retailers the last few months. Then the other thing that they're going to come out with on Wednesday is the builders sentiment report. It's going to reading at a 40, and I really think that reading is going to be way less than that. You see home builders reducing prices of homes, having huge incentives. Their confidence has got to be really low. They're really worried about mortgage rates and what the Federal Reserve is doing. I think that number is going to come in even lower. So let's talk about what the Feds do now and what people are saying. Like, I'm still going to hold true to, you know, the 0.25% rate increase that I talked about this morning. I know I've been holding that stance of a 0.5 point rate increase the last couple videos I've done, but on the heels of what happened with the banking industry, you know, Wednesday, Thursday, Friday, and through the weekend, they're either going to do a 0.25% rate increase or they're going to completely pause. They're like Morgan Stanley, Goldman Sachs, they're all saying Feds need to just stop and pause and let everything sort of chill out a little bit. There's even been a couple firms that have come out and said the Feds need to pivot and actually reduce rates, which I think would be a bad idea because that shows the lack of control that the Federal Reserve would have. So, this next thing I'm going to talk about is the charts. And the charts for mortgage-backed securities over the last 3 days have been crazy. So we had a gap up on Friday from the really bad information that came out on the banks. And then it started high and then came right back down low, and it ended at the low of the day. Same thing happened today. We gapped up, and then we came back down to a low again. Not the greatest chart. I haven't seen these two like candlesticks in a super, super, super long time. And so we'll have to be, you know, we'll see what the next couple of days happen. I really think the PPI reports and the CPI reports that come out over the next 2 days are going to set a trend of what's maybe going to happen going forward. Like I've been saying for a really long time now, end of the second quarter, beginning of the third quarter, I think mortgage rates will look really amazing. But right now we're dealing with multiple offers on houses. With rates where they're at today, I can't imagine what the market's going to be like when rates get into the low fives. So be cautious, be careful. You find the right thing, buy the house, knowing that we can refinance later. But these next couple of reports are going to be really, really huge, and I'm going to really hold on to that May 10th report again that I've talked about that's on 10th and 11th of May that could really drive the market on those year-over-year numbers, all right? Hope you liked the video. Like and subscribe, and I'll talk to you soon. Bye-bye.